Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway. Let's get into today's action. Today's date, Monday, July 21st, 2014. Markets are trading down across the board. S&P 500 down 3 1/3 points. Dow down 40 points. NASDAQ is down about 4 points. Now, the key is, while the markets are down, they're well off their lows. And again, the markets opened lower and sold off today on worries out of Ukraine. Obviously, Russia, the shooting down of this Malaysian flight. There's still kind of an issue there going on, as Putin is just not taking any responsibility. There's a fear of more sanctions on Russia, which ultimately would have blowback on the U.S. and European economies. Now, it was interesting because the market sold off earlier in the day, as you can see here on the intraday chart, and then right here, President Obama came out and gave a speech right around 11 o'clock, little after 11 a.m. Eastern Time. And the key was, in that speech, he mentioned nothing about new sanctions on Russia. Nothing. And all of a sudden, the market started to go up. And you can see they surged up, then you had a bullish pattern here, another surge, and now you're consolidating just underneath the highs of the day. So that seems to be the key on whether or not this market goes up or down. All right, more sanctions or no more sanctions. And that's really what it is right now. You also have the conflict going on in Gaza with Israel and the Palestinians and Hamas. And I got to be honest, it's a horrendous conflict, and, especially the civilian casualties are atrocious. But the markets, just speaking from a market perspective, they're not that concerned. And you might say, well, why? Why isn't it? Well, because as crazy as it is, nothing that goes on there at this stage impacts the U.S. economy, nor the Chinese economy, nor the European economy, and therefore the markets, honestly, they just don't care right now, as crazy as it sounds. So that's really what it comes down to. When you're dealing with the stock market, especially right now, where there's an overlying positive buy-the-dip mentality, it's going to have to be pretty negative. It's going to have to be a big negative shock to get the markets kind of turned around to the downside. Now, we saw that initially with that Malaysian airliner. When it was shot down, you could see the markets really cratered because that was a potential catalyst to a bigger conflict. Right now, we haven't seen ratcheting up of sanctions. We haven't seen anything else, so it's kind of blown over, but you never know. And I think that means we have to be kind of very careful right now because, again, we're into this key cycle date. And you can see, again, the cycle date worked out perfectly. You had this big reversal. Now you've moved back up. But the question is, do we surge back above these recent highs or not? Ultimately, when a cycle hits, it's the beginning of the end. So you start to see this very choppy market action at the top of a cycle or at the bottom of a cycle where you have hard sell-offs and hard rallies. And what that is it's the fight between the cycle bearishness, where it's, in this case, bearishness, and then the buy the dippers, and you have this major kind of exchange going on, what we call distribution. And ultimately, it's the institutions selling into the average investor and vice versa and so forth. So, again, you can see the volatility, especially ever since July 4th. That volatility has really, look at this chart. It's just amazing. Here was the July 3rd day, and then look at the market since then. The market, again, if I zoom out, or if we go back even further, folks, you can see that on this chart, and I can really see it on the 60-minute. We'll flip over to the 60-minute here. But prior to July 4th, the markets, continued to kind of go up, down a little bit, up, down a little bit. And then ever since July 4th, you've put in a top here, and these volatile moves are getting so much more volatile. And that's that beginning stage. That's the beginning. And remember, the cycle is a larger cycle, so it's going to take time for it to play and so forth. But it should be the beginning of that new stage of the market. Okay? So that's what we have going on here on the markets, guys. And as we flip back to the 10-minute chart, a couple things to look for this week. Number one, earnings, monstrous earnings going on. You have Apple reporting this week. You have a bunch of these other players out there. Today alone, Chipotle, Netflix, two major movers on earnings will be reporting. You also have UTX, I think, United Technologies, and there's a couple other firms. Tomorrow you have a bunch of firms as well. So, just be ready for the volatility to continue. The cycle is here. The volume is coming back in the market. You have volatility because of earnings now, and you obviously have to pay a lot of attention to what's going on overseas to see if anything kind of transpires that will freak the markets out. And that's the key, folks. You saw by last Thursday's move, if I zoom out here, you saw that the markets can sell off dramatically. And so it's kind of one of those warning signs that you want to be aware of. Right now, we closed below this upsloping trend line, which I preached to you guys forever, but we never confirmed below it. Confirmation would have been a secondary close below that low. So you've broken the glass, or you've kind of cracked the glass to the point where it's just about to shatter, but it hasn't shattered yet. You need confirmation of that, and I think that will come, my guess, either late this week or early next week, based on what I'm seeing in the charts. Okay? And again, just to look at support resistance, you have a little consolidation here. If we pop up, this is just a minor level now, nothing really, but this downsloping one will be a little bit of resistance. If you break through this downsloping line, you're going to head up to this high pivot right here. And by the way, that's not the absolute high. The absolute high was right up here as well, kind of mirroring that double top right there. So that would be resistance there, and you'd have a little minor pivots along the way on the way up there. But in all fairness, we're very close to the highs still. You've had some volatility coming in, but still, again, very close to those highs. All right. On that note, folks, I'm going to say goodbye. We can take quickly a look at Apple here. Apple continues to kind of just struggle in this range. Had a pretty ugly reversal last week and is not participating. Netflix, ahead of earnings today, is trading up about $8.50, $9. That's about 2% move. It's off its recent highs right here, but if you zoom out on the chart, or if you go back in time, you can see it was much, much lower. You can see this better on the 60-minute chart here. All right, you can see again, this was trading down around the $400 level, had this big move up, and now has come back in a little bit here as well. It was actually lower if you go to the daily chart. In fact, let's go to the daily chart right here. You can see that Netflix was right here into the 300s. So you were actually down to as low as 320, and now you've surged all the way back to about 460, 470, and you're kind of just hovering here. And this is going to be interesting because the chart, I mean, Netflix could report an amazing quarter and see the stock go up dramatically. I mean, it's really kind of could go either way. So I view it slightly on the bearish side, just because, again, you have a downward move here and kind of inside bar, but it's a scary play either way. It's definitely a scary play either way. Anytime you hold into earnings, it's going to be a little bit on the scary side. It says to be expected. SanDisk, we lucked out. I held SanDisk into earnings, and we got a 10% gain out of it because of it. No idea if that'll happen with Netflix today, as it is much more of a gamble. Goldman Sachs up 50 cents on the day, a little bit of a move there. JPM, you can see the financials green. Baidu, Chinese stocks, look at this. Baidu's nearing 200. I have a key level at 203. I've been saying for a long time that it has a good chance to get to 203, so it may get there, and we'll see about that. And taking a look at a couple others, how's Amazon doing today? Amazon is trading up. One thing I want to mention about Baidu and other Chinese players like Sina, S-I-N-A, is also having a really nice day today. A lot of these Chinese stocks could get a bid into the Alibaba IPO, which is scheduled for early August, I think, or kind of in that early mid-August period. So if that's the case, you might want to look at some of the smaller Chinese stocks that haven't had big moves. Sina is actually one that gets my attention. You have a bearish pattern here, but if that fails, this thing could go right back to these highs around 54, 55, maybe even break up into that IPO. You also have stocks like DANG, which is a Chinese player, off its recent highs, but trading decently, a little sloppy, choppy consolidation there. REN is another one that I always keep an eye on, which is a smaller play, and that doesn't really look too good right now on the charts, but worthy of keeping an eye on it. Youku's another Chinese play. That stock is definitely at the lower ends. Does not look great right now, but you want to keep an eye on these. Qihu, Qihu. That's another Chinese player. It's having a good day today as well. So again, think Alibaba IPO, a little bit of hype coming in, and then what you want to see is whether or not that triggers any sort of move up in these stocks. All right, just an idea there. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial.